Good afternoon and happy Monday, everybody. This is another episode of Market Skycast, your official Blue Sky podcast. Once again, my name is Justin. I am your host. We are here with Coach Becky, Coach Matt, and Coach Riz, your Blue Sky coaches. Welcome back, guys. Great to have you here. Now, once again, I feel like a broken record, but before we get into the conflict in the Middle East and what happened since our last episode, there's some exciting news in the Blue Sky world. We actually have a brand new plan that had just launched. It is called the Orbit Plan. Now, we've been listening to you traders. Everybody wants to get funded faster. Everybody wants less consistency rules. So we listened and we made a plan just for you. You can pass your evaluation in 1 day. That's right. No more multiple days. You can get that full price target in 1 day, hit your buffer in 2 days, and that means you're funded by day 3 and you are ready to start your funded account and start getting those sweet, sweet payouts. And still, we also have the launch plans with the if you've been listening to the Blue Sky podcast and you haven't tried us yet, this is your call to try it. Use the code WELCOME26, 50% off of a launch plan. You can get started for $30, which is one of the lowest costs in the prop firm space. So we got new plans, we have sales, and stick around. I'll even give you another sale just for listening and being here with us. But now that we got the housekeeping out of the way, we have to start every episode, with the conflict, with what's going on in the Middle East. Is the Strait open? Is the Strait closed? Is there de-escalation? Is there escalation? I don't even know what's going on half the time anymore. Do the headlines even matter? Does technical analysis still work? This is what we're going to find out. And as a day trader, you really need to pay attention to this segment because there's so much false news floating around. You get one headline and then 10 minutes later it's fake and the price just goes nuts. So let's just start talking with Becky. Becky, what is going on in your head since last Monday when we filmed the pod? We had a bunch of earnings. We had, a bunch of things happen over the weekend. Where is your mind at right now going into the week?
Becky's muted in disc.
Oh, Becky, you're muted.
Oh, okay. So I am literally dying for bears. That's what my situation is. Last week I was like, "There's going to be a day. I'm going to be in it. It's going to be great." And then we just pushed. We just never stopped pushing. So it's tricky for me. I feel like I definitely have had to pay a lot of attention to my intraday information that is printing. Are we gapping? Are we holding? Are resistances holding or are they breaking? And obviously they have consistently just been pushing the heights. And so, I've won my long trades and I have had a few little hits up to my accounts with the lack of, counter trend trading opportunities, which I feel like I look for. And so I basically have had to really just calm it down and try and stay super present with the market because there really is no cap. I mean, there just isn't. We didn't go to war in terms of the big bombs, right? Thank God. But everything's holding geopolitically, I feel like, and it's getting a little bit better. We're warding off the worst of things and we're turning the direction in that. Earnings season, right? I mean, we're getting positive fundamental information on the backs of this. And so it does make sense that nothing is really causing it to crash out. And so the momentum, the trend is continuing. So I had just had to really lock into trading the price action and not my bias, which is like waiting for an elevator ride.
If you guys didn't know, Becky is our perma bear of the group. So she's just waiting for this massive short. And I like how you said you had to play the intraday price action because I'm almost with you. My bias, you have your bias, but you kind of have to just stay in the moment. And when you're sitting at the charts, you kind of have to let it develop in front of you. You can't just say, "Oh, I'm long bias," just because you are. And this is the kind of environment we're stuck in. So are you just kind of living in the moment, almost candle to candle at this point?
Yeah, seriously, I am. Like I have to talk myself off just every time we hit another level just to want to short because that's a part of my energy. And so I have definitely had to really say, what is the price action doing? Are we breaking highs or are we breaking lows? And if we're breaking highs, I need to be prioritizing the long direction. So it's been a very, very purposeful, intentional trading season for me because I do have to just quiet what my urges are and just focus on the technicals and what's printing in front of me. So that's why I do love the technical analysis because sometimes the fundamentals and technicals are decoupled. Sometimes they're not. Right now, I don't see any big reasons for a short either. And so that is also helping to remind me to be present with my price action and trade my time zones that I trade.
Great answer. Now I got to ask, last week, you basically could have marketed in at any point in longs and made money. Did you take longs or were you trying to short it the whole week?
I definitely took longs, and my profitable days were my bullish days. I definitely had some shorts in there, and those almost always got stopped out. Or when I did
Hmm.
take them out, I would recognize that it was a scalp and it was a counter tent grab, and so then it would be a smaller time frame trade for me. So I definitely saw my most consistency on the longs, and I definitely do enjoy a good long. I mean, sometimes it's really nice to just march it up, have a runner, move the stop up on the pivots and stuff. And so I did have some very successful longs for sure. So I can trade in both directions. It can be done.
Love to hear it. And you know what? It literally, like I said, you could have slapped market longs, and the FOMO was real with people who didn't get in. You think it's too late, but it wasn't last week. So great
Yeah.
answer. Now, Coach Riz, Becky talked a little bit about the technicals, having to trade your style. What did you notice last week since we filmed the last podcast? Has your trading changed, or is there anything in the news that's really sticking out to you, or is there anything that you're waiting for news-wise that is going to affect your trading this week?
Last week you and I had this conversation. You were hanging with me in the midday, and we were going back and forth because it was a question of whether to be risk off or to be more aggressive because of the volatility and the push. And it's one of those things that if you mess around and if you don't trade the trend, you're going to miss out on the moves. And then you're going to end up with scalps and trying to take uncertain trends. And really, this is a point of you can't fight the trend. You really need to just stick with it, size into those smaller positions, and then just scale in accordingly. You just can't find it. The market just keeps buying and breaking out. Our technicals are getting thrown out the window because just when you see that resistance spots, all of a sudden the bulls could step right in and they just annihilate the bears. The bears have not been able to create a coordinated effort to really drive the market in their general direction long enough.
Yeah, and I remember this exact conversation because I typically don't like to scale in. I like to get my entries, and if I'm wrong, I'm wrong. But especially on the smaller time frames with these liquidity grabs, you kind of have to give yourself a little room to see if you're right or not. And do you think that's just going to keep happening until, the headlines settle and then we have some real information about what's going on?
You know, eh, that's a really great point that you're bringing up. But really the underlying tone is that we're really here looking for repetition and patterns in the market. And if the pattern is to the upside and the continued move in this direction, that's the pattern to trade. That's the pattern to trade. If you're looking for something different, then you're looking for something that isn't there, unfortunately. That's one reason why I'm just keeping it simple. I'm staying with the normal technical trades I'm looking for, trading off the pullbacks, and I'm not leaning into where this is a historical level. There's going to be a rejection at this because we're blowing past them. We're breaking them. People are getting stuck bag holding left and right. And you can see that because the minute the shorts start getting annihilated, they're stepping right out of the way. And then all of a sudden you get this aggressive move, next level.
Mhm.
And it's just like, that's what that is. Those guys are just getting smoked left and right.
Yeah, it's funny you say, "Oh, this is a historical level. It needs to pull back." I can't tell you how many times last week we hit my full bull PT, and then we hit the next one 5 minutes later, and the next one I was like, "Man, that was next week's target. We're already there." It's
Yeah.
wild. Yeah, great points. Just stick with it, size down, change your strategy, and don't try to find something that's not there. Great points, Riz. Now,
Thank
Matt,
you.
I have two questions for you. Now, is there anything specific that popped out conflict wise? And then secondly, we've had a massive earnings last week and they did what we thought, but the ticker did actually went down. So I'm kind of curious to hear your thoughts on both of these.
Well, I got a couple things to add on this. Number one, yeah, bulls are in firm control of the trend. There's no doubt about that. But in trending analysis, you have three phases of a trend. You have one, the breakout. You have two, the overextension, and three, you have three, the pullback. And pullback analysis can happen through consolidation, or it can happen through flags, or it can happen through retracements. And right now, I have us as overextended on the bull side of the equation. I personally expect a high base to develop here, or I expect a pullback to develop here. And so, if the bulls are going to be ferocious and they're going to, push this up to 7,400, for example, they're going to do it without me a little bit. because I'm not going to be aggressive in an overextended environment. It's just not going to happen. It's not going to happen this time. It's not going to happen a year ago. It's not going to happen 5 years ago. Not going to happen 10 years ago. Won't happen 5 years from now. We are deeply overextended at this point, and as such, I'm going to treat it with a little bit of kid gloves. And although Becky is the resident perma bear, as day traders, we go both sides of the ledger. And the simple reality is, I think the best day trades are going to be during the pullback series. And when you look at the intraday, for example, right now, bulls can try to push it as much as they can. They can try to pick up pennies in front of a freight train if they want. That's fine. But to me, the best trades are going to be during the pullback when a support level gets broken. And so if you're trying to short against the current price right now, you're running into major levels. Well, where does it start to get a little bit easier? Where does the market start to get into a pullback? The market doesn't get into a pullback through a doji on the futures open last night. The market starts getting into a pullback when it breaks the low of a candle. And so when you look at the daily candle here, have you broken one of those daily lows yet? One? Anyone? Anyone?
Absolutely
Has
not.
one daily low got broken yet? So if you're trying to short and the market's not breaking daily lows, you're going against the trend. And so if you're trying to take advantage of the pullback, you got to wait for it to start clipping some of these daily lows here and start entertaining that as the pullback. So for me, I'm patient here. I expect a pullback. I'm going to wait on that pullback, and I'm not going to cut my face against the rug trying to get it. I'm going to wait for it to get underneath. And I think that level for me, as you start to entertain that, is right around 7,100. Anything above 7,100, I'm going to see as bullish continuation as we start entertaining a little bit of a pullback series. You got to get underneath 7,100. If you don't get underneath 7,100, we're in a high base. And if you're in a high base, it's all minor levels in a high base. So to me, I'm going to be a little bit patient waiting on that pullback because I just don't see how far the bulls can take it. The second point I want to bring is to the geopolitical side of the equation. If you're trying to navigate the geopolitical side based on headlines, intraday, daily headlines, good luck with that. A lot of nonsense, I would say. For people that don't understand something, one thing the market has generally accepted here is that the president of the United States wants an off ramp. It might not happen today, it might not happen tomorrow, but the president of the United States is seeking an off ramp. And the market has accepted that as the conclusion. Now, whether the market's right or not, we'll have to wait and see. We got ceasefire conversations starting tomorrow. That's going to go into Wednesday. So keep an eye on that ceasefire. We're most likely, if I had to say base case right now is an extension of the ceasefire to see further conversations develop, because it's impossible to get a deal, in my opinion, with Iran in a 24-hour time frame. This thing's going to be a little bit down the road. So the ceasefire agreement is going to continue. And then the last point was on earnings season. Earnings season, in the first week of earnings season, and last week was the kickstart to earnings season. And earnings season lasts for about 4 weeks. And in that, you get certain companies that report early in the earnings season. In the early earnings season, it's all about the banks and a couple of the growth stocks. Banks did really, really good. Whether you're talking about Citigroup, or whether you're talking about Morgan Stanley, or whether you're talking about Ally Financial, or even Goldman Sachs a little bit, JP Morgan, they all did pretty good. The only dog I saw last week was Wells Fargo, which is getting carried. But so specifically in earnings, you want to see the banks get on base, and that's exactly what they did. They did good, and a lot of secondary development. You look at Morgan Stanley, for example. Morgan Stanley's on a heater here, developing into a high base. You look at Goldman Sachs trying to break out here today. You look at JP Morgan Chase breaking out here today. You look at Ally Financial up all the way into a multiple time frame level of resistance. Citigroup looking absolutely fantastic right now. And so you have that kickstart to the earnings season. And Ace is 100% right. You're not getting a bull continuation event without finance, because the one thing finance does is it gives us the early warning signs of negative fundamental analysis. It gives us the early warning signs of credit crises or liquidity crises. And we just didn't see anything like that. In fact, we saw 88% beats right now in EPS on the EPS side of the equation. You're seeing a 10.7% average beat rate, and those are fantastic. So when you talk about the kickstart to earnings season, in my estimation, banks just got to get on base. They hit a double. I thought the banks did pretty good last week. Now, on the growth side of the equation, you specifically mentioned Taiwan Semiconductor.
Right.
Now, why did a company that had such a good earnings report go down? Well, I've heard that question probably more than about any other question. Why
Well, that's
does a good
such a tough
company
one
go
for it's a tough one for new traders. You see them just blow it out of the water and then it goes down. So like, why does that happen, Matt?
It went down because it ran 60 points going into earnings season and was at a major level of resistance, and in the most likely scenario is profit taking through that. And so a lot of times when you talk about the quality of an earnings report, you don't want to look necessarily at what it did from a price perspective. Yeah, Taiwan Semiconductor went down. Do I have a negative opinion in Taiwan Semiconductor? Heavens no. They had a 6% beat on EPS, 28% growth rate year over year, slight increase in forward-looking guidance. ASML had a wonderful kickstart to earnings. Not a MSL, a SML. That's another AI very popular name. They went down as well. ASML had one of the better reports of all the companies last week. It had one of the top 4 reports in all the market last week. It went down. Why? Because you were extended going into the print. That's why. And when you're extended going into the print, the path of least resistance is profit taking down. It doesn't mean it's a negative. You now see it through an increase in support. So I see it as a positive. But technical expectations still matter in earnings analysis. If earnings is starting at a low point, a lot of times they go up. Even on a negative report, they'll go up. When it's overextended on the top side, a lot of times you'll see some profit taking. So I want to put too much into it that Taiwan Semiconductor and ASML went down on earnings. All they did was pull back against a bullish uptrend.
Yeah, a great point. And when I was a new trader, it just blew my mind. They just had the best earnings report they've ever put out, yet they went down. But that's a great explanation, and it's not rocket science. Sometimes it's just that simple. We're at support, we're at resistance. It is what it is. Any final thoughts, any of the coaches, before we move on to our next segment?
I think just one little nod on the earnings segment. If you are interested in trading earnings, back test that, because you can learn a lot about an instrument to figure out what they have done in the last 3 years of earnings. It's not actually that much data to do. You can just look at their earnings over the last few years, and then you can see, were they pushing up into it, and then did they gap down, or are they something that pulls back and then they gap up? So if this is something that you are kind of very interested in, the more we talk about it, I would definitely encourage everyone to spend some time on the charts and pull up that data on a weekend when they're not trading. It's very interesting to see how they move.
Absolutely. Now let's get into our next segment, Market Watch. Now, obviously, we sound like broken records. It's, tread lightly, keep an eye on the headlines, but economic data and earnings do matter. And like Matt mentioned, we are getting into the thick of earnings seasons. There's a lot of big names coming out, and there's also some economic data come out. So, as always, Becky, what are you looking for going into this week?
I feel like don't call on me. Okay, so
I don't know.
I know. I think it's going to go long or short. I think that's what's going to happen this week. I think we definitely have, the bulls have not given up yet. They just haven't. And so last week we could have said, maybe they'll give up this week. They sure didn't. And so the moral of the story right now is that they have not given up. And so I think we have to lean on our technical analysis. Is the trend still holding? Is support still holding? Are we coming down to support and we're pushing up? I think everyone can probably notice that we did gap down again on a Sunday open, but then we gapped down for what? The low held for 5 minutes, and then all night long it made higher highs and higher lows. And so again, we see, even in settings where it's gapping down and potentially the bears could tear, they're not winning. They're getting bought and back up every single time. And so for me, the trend is holding, and I am going to be real ready if I can see that break. But at this point, I also would say it's been running for so long and we continue to break highs. A high base and a flag pattern, or at least a consolidation before the fall, could very well happen, because this was definitely a V-shaped recovery. It was nonstop. And so when it gives, I'm very interested to catch it, but so far it has not. So I'm definitely trying to just stay really present and not trade my anticipation, just trade the chart.
Yeah, so more reactions than anything. Just play what it gives you.
Yep.
I think that's a great way to look at it, because we don't really know what's going to happen, what's going to come out headline wise, what these earnings are going to do. Just play the chart, react appropriately, and stay alive. Great points, Coach Riz. Is there any data that you're looking at this week? Any specific earnings or anything in general that's going to shape your trading for the coming week?
Really, I'm just keeping my ear down to to the news wire, waiting to hear what's going to happen as far as the extension and the ceasefire. That's probably my biggest one. Thursday we've got PMI, S&P PMI. That might be a little something. Then Friday we've got Michigan consumer expectations. So we might have some decent news on Friday. That probably will be your main catalyst that might actually give the market something to really move. So that would probably be it. Besides, what other news events might drop throughout the week.
Hmm. Are you still kind of trading small, playing pullbacks? Is that kind of still what you're looking into going in the week?
This week I'm actually leaning a little heavier this week. It's the end of the month. So for me, the end of the month is kind of, or, I'm getting into the last stretch of the month, I should say. We got about, 10 days left in the month. So, this is about the time that I start leaning in a little heavy on the market. My sizing is a little bit larger just because I'm trying to get payouts, I'm trying to get cash out. So that's one of mine.
Hey, get your buffer, start sizing up, get those sweet payouts. That's what it's all about. Absolutely. Great answer, Riz. And Coach Matt, you are our resident earnings expert. We got a lot going on going to earnings season. What is sticking out in your mind?
Well, I'm personally on the other side of the ledger on the economic reports. I could care less about any economic report, to be honest with you. And I
I'm right
don't
there
think
with you.
the economic reports are going to matter until we get a resolution to the geopolitical side of the equation, because none of the economic data is any degree of truth right now, because we don't know what the input cost is going to be as we go through the geopolitical situation. And so I do think economic reports are a little bit secondary this week. What I think there's two big time things that I think we need to understand from a market perspective. And the number one is, if we're having ceasefire talks and we're having negotiations with Iran on Tuesday and Thursday and Wednesday, those are going to be the number one catalyst for the week, hands down. If there
Hmm.
is a deal to be announced, we are going to see oversized price movements. If there's de-escalation, escalation, the market is very sensitive to pricing in de-escalation, escalation type scenarios. So that's going to be the number one for me. But number two, and closely number two following that, is Wednesday night, specifically Wednesday night. Wednesday night, you have earnings. You have Tesla, number one. They're the first Mag 7 component to report. And the Mag 7 companies are leading the S&P 500 right now.
Hmm.
They are leading the charge on the top side. Leadership is there big time right now. Can they support that? So Tesla's the first Mag 7 company reporting, but it's not the only aggressive stock reporting on Wednesday. You got ServiceNow reporting on Wednesday. You have a big time company in Lam Research reporting on Wednesday as well. You continue that with Intel on Thursday morning. On Tuesday and Wednesday morning, you get a bunch of cyclical names, aerospace and defense companies. You get United Health. So it's a little bit similar this week to last week. Last week we had about 30 S&P 500 companies. This week we have 89 S&P 500 companies. First couple days, Monday, Tuesday of this week is going to be really kind of cyclical names, not heavy hitters, nothing major market moving. But as you get into Wednesday night, specifically Wednesday night, is when you start to see catalyst from earnings. ServiceNow, Lam Research, and Tesla are all big time AI names. Big time AI names. ServiceNow, probably one of the top 20 AI names. Tesla's obviously up there as well. Lam Research is a tier 2 AI name for me, and then you have Intel the following day. So a lot of big time earnings names coming out of the AI space, and the AI space right now is really kind of leading the charge. And if you understand anything about the AI trade, there's been two big waves on the AI trade ever since AI really started becoming market story back in 2022 with Nvidia and their first AI chip. You've had two big series of price movements on the AI trade, and I kind of have a feeling we're starting the third one right now.
Are you playing any earnings this week, or are you just waiting and see what happens?
I play earnings every week.
Love it, love it. Now, I was going to save this to the end because this is an important topic as well. But Ace in the chat asked, and we'll just start with you because we're on you, Matt. Oil. What's on your mind about oil? Is it still I think, what was your numbers? 150 or 60? Are we still heading to either side?
I honestly, I think the levels are very clearly established right now. It's the 80 level at the low side, it's the 90 level at the top side, and I have absolutely zero desire to touch oil right now.
Is that are traders still using it as a benchmark, or is oil kind of cooled down and it's literally just waiting for some headlines to come out?
No, I don't know if oil's ever been a benchmark.
Hmm.
The dollar is the benchmark, and everything goes off the dollar. Oil is obviously going to be sensitive in the geopolitical side of the equation, and it's obviously showing us a little bit of escalation, de-escalation stuff, but it doesn't show us anything other than what the dollar already tells us. And so I anchor on the dollar. I don't anchor on oil.
Hmm.
I don't have any desire to try to catch an intraday trend on oil right now. To me, it's for me, and this is just me. Somebody else can be different, but for me, everything I do on oil is actually relative to what I'm doing on energy itself. In terms,
Okay.
so I don't play crude oil, I play energy stocks. And so when I'm looking at a lot of volatility on oil, my philosophy on energy stocks is a little bit of a stay away right now as we're dealing with some downward pressure and some volatility on oil. So I'm just kind of in a little bit of a patient mode, tracking the short-term downtrend on energy. Energy had an opportunity to develop when it was above the 50 period moving average. It is a complete stay away until reversal analysis right now. And so I don't have anything going on crude oil. I don't anticipate doing anything on crude oil,
Mhm.
but I do anticipate doing stuff on energy once we get a reversal here. But we're early in that conversation, so it's not going to be important for me this week. I the AI trade is far more interesting to me than anything that's happening on the oil side of the
Mhm.
equation. So that's where my focus is going to be. But I'm definitely interested in a reversal on energy. It's just going to be a moment or two.
So basically, just wait and see is what you're saying.
I think that's what the price tells us to do.
Yeah, absolutely. Great points, Coach Riz. Now, remember, it's been a few weeks, but I remember when you were using oil to kind of guide your NQ plays. Are you still doing that, or is that kind of an afterthought now that it's not doing too much?
No, as a matter of fact, I definitely am. As a matter of fact, I'm watching the order flow on oil because, we're noticing that at the open of the market and the close of the market, we're seeing the options chain is seeing some erratic behavior. Some exuberantly larger than ever seen orders are being placed on the chain, so there's a lot of manipulation. So I'm especially watching it right now because there are some moves that are happening that very manipulated moves. So yeah, I am watching it very keenly. We've already seen it happen 3 times. There have been manipulated moves in the options chain that have translated directly into the futures commodities. So yeah, I'm looking at it because I'm ready. I want one of those bangers myself.
What tickers are you looking at for the options? USO or what is it?
I'm looking at WTI because it is cheaper. USO is super expensive. So, it's going to be a little pricey if you want to play that game. So, definitely maybe want to look
Gotcha.
at WTI.
So you're looking to build a nice swing position, is what I'm hearing.
I am. I want to hit a grand slam for the year. If I could nail a pretty massive banger, I think that would be great. I could use one. It's coming up to my third quarter, so I've got some numbers I need to put on my board. I usually work through quarters, so I'm always looking at where my performance is, and I'm getting close to that. So I really need to start putting some big numbers on the board.
Well, let me know when you get this banger play started. I want to hop in with you. Now,
Absolutely.
before we get to Becky, I promised you guys a sale if you stuck with us. Now, remember, I talked about our new plans, the Orbit plans, where you can get funded or you can pass your eval in one day, be fully funded within 3 days. So we have two sales right now. Use or the Orbit 50K and the Orbit 100K. We're going to use the code Earth25. This is an Earth Day week sale. Earth25. It's going to get you about $50 off the 50K, and about $60, $70 off the 100K. So if you're looking to get started on these orbit plans, you want to try them out, this is your opportunity to do it. And remember, there's no activation fees, no second fees on these accounts. So it is a one-time fee. You pass it within 1 month, that's all you'll pay is $150 for the 50K. And before we move on to Coach's Corner, Becky, any thoughts on oil at all? I'm not sure if you even play it or if you look at it. I'm kind of curious to hear your thoughts on it.
Look at it, but I haven't been engaging in any plays on it for now. But I definitely am trending it because there's so much going on there. There's a lot of volatility, and so my approach has been to kind of get back in sync with it because I don't think I've given it enough attention in the last couple of years. I kind of got away from it. So I've been watching, but I haven't been playing. And for me too, we're still in that downward slide, and I could see more momentum down. So it seems like there could be some great opportunities there, but I am not in a play on it now.
Do you base any of your other ES plays off of oil, or do you just kind of keep an eye on it, just see what it's doing?
I don't see a consistent correlation. I think that they have too much more separation in their driving forces behind their movement. And so I definitely think that I honestly see more geopolitical and seasonal involvement with the crude oil. So I factored those in more heavily, but I trend to trade ES, more specifically to just what's going on with the overall world and the financial and the stocks more so. So a little separately. Good question.
Yeah, perfect. We went over oil. We went over some economic data, some earnings reports. So that's the end of our Market Watch segment. Now we're going to go into my favorite segment, the Coach's Corner. We have some real questions from some BluSky members. We have some from a new trader, a frustrated trader. So I'm kind of curious to see, what the coaches think. And let's go ahead and just get into it. And I want to start with Coach Matt on this one because I know what he thinks about this question. And let's see where it is. This is perfect for you, and I hope you go on a rant. Let's see what you got to say.
I'm
It
very
is
interested.
He's
how do I
baiting
know
you.
how do I know who to trust when everybody claims they're profitable?
No. Oh,
And
that must be
that is a great question
that must be
because you
somebody
don't
hanging
know.
out on Twitter these days because Twitter's
Yeah,
profitable every second of every day ever. It's
100%.
never happened to
Everybody
me.
has a Lambo.
Um, you trust your eyes. That's what you trust. If you see people out on social media and they're sitting next to their Lambo or their private jet, it's not their Lambo and it's not their private jet. I can promise you that. And so, no, I don't trust anybody that comes out on social media and says, "Look at me, look at me, look at me, look at me." I have zero desire for that. They can go have whatever they want to have, but no, it's kind of what Ronald Reagan said very back in the day. Trust but verify. Trust but verify. You can give people your trust, but sit down with them for an hour. You'll know. You'll know if they're legit or not. You'll know very quickly if they're legit or not. And so no, I don't trust anybody and what people say. It's what people do that always matters to me. And so trust but verify. Enjoy the old Ronald Reagan philosophy there.
Now, follow-up question, since there's so many gurus, so many communities, so many things like that, what actually makes a good mentor community, or what's something that is not a red flag, but a green flag when you join a community or see somebody live streaming, teaching, things like that?
Well, I think what stands out at BluSky is kind of what separates and what attracts me to BluSky.
Hmm.
I remember the first time I sat down about a year ago. I've been with BluSky for a little over a year now. And I remember the first time I sat down with Mike in the morning, and I was just kind of a fly on the wall. Just I've been in the market for 20 years. I've been in this industry in a lot of different ways, and I've seen a lot of crazy things. And very quickly, I've been in rooms where I've been there to sit there to evaluate other speakers' performances, basically. And they didn't know I was there. I was sent there for other purposes, and I was there to evaluate the speaker performances. And within the first 5 minutes if that dude or gal is legit or not, quite frankly.
Yep.
And many times I've went back and been like, this is just absolutely nonsensical. You got to make some changes. This is not going to be sustainable. It's not going to work. And they're just trying to pump, 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 sell, sell, sell. That's
Mhm.
it. And you can hear it. You can smell it. You can hear it. You can see it.
Yep.
And you don't want to discount it. Trust your instincts on that. But I remember sitting down with Mike for the first time, and I had never heard of BluSky before. I just heard about this new prop firm, and they had some interest in developing some content. And so I sat down with Mike the first time, and Mike didn't know me. I didn't know Mike. And I remember just sitting back like a fly on the wall, listening to Mike call out trades and call out
Mhm.
levels. And it wasn't his trading that caught my attention. It wasn't. It wasn't the, oh my goodness, look at this level. Anybody can do that. It was
Mhm.
the philosophy of teaching everybody that was in that room to have an understanding of it, not just to go trade it, because that's what everybody's like, oh yeah, this is a great trade, go trade it. No, let me explain why this is a good trade, or let me explain why this is a bad trade. Let me teach it to you so that you can have an understanding of it as well. And that just stood out to me, like hit me with a ton of bricks, because I just loved it. I just loved it, because I think about Warren Buffett, and Warren Buffett categorizes himself not as an investor, not as the oracle, not as the greatest of all time. He categorizes himself as an educator. And that's how Mike didn't just tell me that, Mike showed that to me.
Mhm.
And the very first time I saw that, I was like, yep, Mike's legit, and if Mike's legit, BluSky's legit. And I just got sold on BluSky because of the quality of what Mike was doing. And it wasn't just that one session. It was like that first couple weeks, every single morning, it was the same thing. Let me not only talk to you about these amazing levels, let me talk to you about why it's important, and why this level is important, and why it's going to go down to that level. And it was the educator's heart, and that stood out to me. And so I just absolutely love that about Mike, and that got me sold on BluSky. So
Mhm.
it's hard when you're a new trader to cut through the nonsense.
So
It,
hard.
it it is, because there's so much out there. There's
Mhm.
so much out there. And if you think it's bad now, just wait till AI gets actually good. It's going to get
Oh
even
my God.
worse and worse
It's
and
gonna be the
worse.
wild, wild west.
Oh, it's gonna be crazy, especially since America does not want to regulate anything until we have the end of humanity. We'll have to wait and see for that one.
That'll be a fun
But
podcast episode.
yeah, we'll definitely dial it in for that podcast episode. But
Yeah.
and so, but to me, it was Mike taking time to explain to the community why that was the case. And
Mhm.
I've seen so many people in stages, in podcast, in live streams. Don't ask me why. Just do it. Don't ask me. Just do it. What do you mean?
Mhm.
Why? That's a dumb question. There is no dumb questions. There's only dumb answers. And so, in terms of the care and desire that I saw that moment, that stood out to me a year ago, it stands out to me today. So I don't care about other people. I care about the people that I'm involved with, and I love what Mike did. I love what he represents, and that's why I love BluSky.
Yeah, and you almost stole the words right out of my mouth, because something that I love about Mike, and also that translates to BluSky, it's something about finding people who explain like the why, like you said, not just the what, or it's showing it. It's why we did this, and being as transparent as possible, not gatekeeping anything. Because Mike could sell a course on his levels, he could sell an indicator on his levels, but he sits there every day and tells you his levels and trades off them and shows the wins and the losses, which I think is great. Transparency is key. So
Well, and
great
I love
answer all around.
what
I knew
Ace
that
just
question would
put
get you
into
fired
the
up.
chat. You just put them in. We rise by lifting others, and when you
Mhm.
see the leadership embrace that, it gives you a lot of confidence in what they're trying to build.
Yeah, and Becky was actually streaming with him the other day, and she brought up a great point. Where do you see the owner, CEO, president of a prop firm company streaming day in, day out, showing that he knows what the hell he's doing, and that he is the boss? I don't think you see that anywhere else.
Nowhere.
Oh, and Nacho made a great point. Don't underestimate the labs that are offered for beginner traders. And my man Matt right here does one every week on technical analysis, and they are gold. And it's not just futures trading. If you play options, if you play long game, small game, anything in between, this is your guy to learn from. So great
If
point
you want to
overall.
learn technical analysis in general, it's a good lab.
Yep, absolutely. And they are all recorded, but being there live is key because you can ask questions in real time. And we're one of the few companies that I see stop what you're doing and answer the question. It's amazing. You get full access to these coaches. Now, let's move on to Coach Becky. I'm very curious to hear your answer on this as our psychology expert. Um, this one, I know I still struggle with it. You have your plan, you're doing everything perfectly, then all of a sudden you hit the trade. And the question is, why does everything make sense until I'm actually in the trade?
Because you don't have real leverage on the line when you're just setting it up, right? So that's why I really push and encourage people to have a really strong pre-market, pre-trading session plan. Like think about it when you're not have those heightened emotions and your energy isn't into it, because that's when you are the most logical and strategic and intentional. And so that gives you the best opportunity to really create a strong approach to the price action, what level you're looking for, what a reaction there would look like, what would encourage you and enable you to get into a long or a short, and plan ahead. Because once you click buy or sell, once you start entering that trade, automatically your body goes into this another level of fight or flight almost, and you have to train yourself to keep that manageable and aim for neutrality. But that's not normal in the beginning, and it takes a lot of experience to dial that in, because it's so easy to start getting, oh my God, look, it's making money. I need to make money. It's already in profit. I want to lock in the profit. Maybe I don't need to hold to my trade. What if it comes back on me and it starts bouncing? You're like, shoot, it's going to come back on me. Like the emotions start to play. But before you put that leverage on, you're like, okay, if it held here, this would be the logical target. So I would want to hold it to this place. So it's a very different part of your brain that is in charge when you flip and have that leverage on the line and your accounts in play. And so definitely that is just human biology. That's the way that our minds are created. We go into this like protect our situation, and so it's so much easier in that situation to want to keep yourself safe and to monkey with your plan once it starts to move. And so that's very, very real. Best thing you can do is really create the strongest trade plan you can before you enter the trade, and then do your best to honor it, even if that means setting your trade and walking away.
That's a great point, setting your trade and walking away. That is one of the hardest skills, and I've been trading for 6, 7 years, and I still struggle with it. And something for me, I want to just piggyback on that, was just size appropriately, where if you do lose, like I already accept that I accept the loss before I get in the trade. If I'm not okay with that loss before I even get in the trade, I'm oversized, or it's not a good plan, or it's not a good trade. So I think, walking away. But what did you personally do to kind of get your mind out of that funk? Did you just walk away and have PT and stop loss? Or is there something you can do while you're in the trade, like an exercise to get yourself over the hump?
Yes, I definitely think, okay, don't think I'm weird, but I think we have to talk to ourselves in
We
the
already
best
do.
kind of way. Okay, think I'm weird. It's fine. I can take it. But nerd out with me for a second and talk to yourself while you're trading. Rationalize it. Say, I see a bullish sign on this time frame and this time frame. This is my level. It's still holding. The trade is still good. I need to give it time to play. Trades don't happen in an instant. It's very rare that it just flies to your target. Give it time. And so just allow yourself to like have a little internal monologue. I mean, retail trading is pretty personal. Maybe you're in a stream and so it's not quite as intimate, but I think we have to constantly keep ourselves level, and that really is so grounding. Some people also find peace by writing it out, having a piece of paper in front of them saying, my support is holding, the trade is long, I want to let it ride. And then I also, that as a third option, if you're not live talking to yourself or live journaling to keep yourself grounded in your price action, have an audio that you can put in your ear that you record for yourself. I haven't talked about this in a while, but maybe I will again. But if you have an audio pre-recorded of like, you honor your trade system and you wait for your setups, and this is trading as the game, you already accepted the risk of your trade, you can have those little reminders pre-recorded to just pop in your ear and help you take a quick walk out around your property or whatever. I think that there's a lot of things that we can do to stay grounded, and honestly, it's just reminding yourself in real time what that looks like and how you intend to be your best trader self.
Love it. And this reminds me of one of your psychology labs. I can't remember what the topic was, but you basically said, everybody be quiet. I'm going to do some mantras. And you just read a bunch of things that you already had written down. I think we need a playlist of that, because if I had that while I was in a trade, it would calm me down a lot. Great answer, Becky, as always. And last but not least, Riz, this is a question, and I know a lot of people go through this because I went through this on one of my very first trades. It was an absolute monster. And especially when the market's trending, when you hop in, I just started and I'm already making money. Is it this easy?
Absolutely. It's even easier than that. Just messing with you. Congratulations, first off. And secondly, I'd prepare for a long haul. The market will humble you. It happens to a lot of us, that we get into the market and we have that windfall. But, do not mistake the windfall for, luck at times, because, luck does happen in the market. Sometimes you will get lucky with the trade, but, you need to stay true that, your technical and your read on the market is right, and that your trades are working out, more often than not, that you're not just relying that your dumb luck is helping you out, because that will lead to you to a lot of false expectations and false hope that you're trading better than what you are. So, you need to also acknowledge that, you had some windfalls possibly, and maybe they might have been that, going into your trade journal, look at your trade notes. Are your trades lining up with, you yourself as a trader know what you're doing, and you have to be brutally honest with yourself, whether you're cheating or whether you took someone else's trade or you followed someone or you took your own trade. If you lie to yourself, you're only fooling yourself and you're cheating yourself.
Now, pretend I'm a new trader and I've gotten lucky, or I've made, a substantial amount of money in my first month or two. Is there a way, anything you can put into place to protect what you've already made rather than going through that cycle of a lot of people just they make it, then they lose it? Any advice you'd have for that?
Yeah, definitely. So what I would first off suggest is recouping your cost of investment. So, you definitely need to pay yourself and pull the money out that you originally invested to lock that in. Put it in the bank, whatever you want to call it. From after that point, you have your war chest then. It really depends on how you want to build your war chest, whether that be that you're going to stack additional evals and start growing your overall portfolio, or you're basically going to be more risk on with the accounts you have and to continue to try to grow them. Personally, I would stack. I would be looking to add accounts, to keep the grind growing, and increase your account size, so that instead of having maybe six, maybe you're trading a dozen or 20 accounts. You want to be able to have that, so where you have the leverage at your disposal, and to be able to scale in and out, because the last thing you want to do is put all your eggs in one basket and sell yourself short. So it's really important that you structure your money out, create some kind of agenda, a plan. If you're going to continue trading, how many accounts you're willing to lose per week. I think we were talking about that last week with some traders, like myself. I give myself about 3 to 4 accounts a month. I'm giving myself more than that. At the same token, I have to pass, and I can't just be constantly throwing money at evals every week. So there has to be that balance. So that's what I would say, is to look at what your balance, what your income is, how much you've made, how much you're willing to risk, and then you can start to kind of carve it up and create some kind of agenda for like a 4-week plan. That just in case this week is red, next week you still have money in the port that you can continue and create longevity for yourself in the market.
I think that's a great point of paying yourself, because a lot of people, they grow an account and then they start sizing heavier, and then they blow it all, and they actually lost money because they didn't even get the money they paid for the evals and stuff like that. So that's actually a great point. I saw a great quote that really resonated with me. The fastest way to lose in trading is thinking you figured it out too early. So just because you had a few wins doesn't mean you know everything. Pay yourself, stick to your plan. Great answer, Riz. Absolutely love that. And that's
Thank
going to
you.
do it for our episode of Market Skycast. We gave away a sale. We talked about our new accounts. And remember, guys, we have streamers on all day, every day. Whether you want to learn, whether you want to live trade, whether you trade at daytime, whether you trade at nighttime, there's something for you at BluSky. So even if you're not actively trading, pop in, hang out, ask questions. We are here to help. And until then, guys, stay profitable.